thank you so much for joining us today. Olumide, so first of all, I got to get your reading of the dynamics in the global oil market. So there has been, of course, a lot made of the impact of the coronavirus outbreak and its impact on economic activity in general, and of course, as a result, the oil price. But given the news flow right now, how are you analyzing the outlook for oil? Because clearly that's very important to Nigeria.
Okay. It's just 50 days into the year and so much has happened already. I mean, we started out the year with the U.S. bombings in Iraq and, of course, taking out the Iranian general. And, of course, that spiked prices initially. But, of course, coronavirus, COVID-19 came on board, and that has seen prices tank in recent times, about 13% down for the year so far, currently around $58 per barrel. New cases of the virus are less than the usual. Of course, the rate of increases in the new cases that we have found is less than it used to be earlier when the virus was first reported. So yes, OPEC has revised downwards, the demand expectation of 2020. Of course, towards the end of the quarter, and of course going into the rest of the first half, I expect that prices will correct eventually. Because of course, if the virus,
what does correct mean for you?
So correct up would definitely mean something higher than $60
so
per barrel.
If you describe it as correct, so you are of the view that the oil price really should be more than $60 a barrel.
A little higher than
given
$60 per barrel.
Economic
I know that our forecast for this year is something in the range of $58 per barrel to $64 per barrel. So of course, I expect it to tend more towards the higher end, which is more $62, $63 per barrel rather than 58. 58 is because of the coronavirus incidents that we've seen so far in the year. It's more around 63, 64.
And I think overall, the level that we see the oil price at is really a reflection of the determination of OPEC and OPEC Plus to keep those prices stable. And do you get a sense that they are still committed to that?
Well, last month, that's in January 2020, OPEC production was something around 28.86 million barrels per day. That's low. I mean, of course, year on year, month on month, you've seen lower volumes being supplied to the market. Last month wasn't majorly as a result of OPEC's action. Of course, Nigeria increased production like last month about 25,000 barrels per day. We also saw Saudi Arabia increase production by about 57,000 barrels per day. Major challenge last month was with Libya. Libya has political issues right now, and that took out about 344,000 barrels per day from production. But all in all, OPEC is still working really hard to ensure that markets are balanced. And of course, you saw them come out recently to say that due to the impact of the coronavirus, they would likely impose further cuts on members going into the rest of the first half of 2020. So OPEC is still working so hard to ensure that prices remain at least at the threshold of $60 per barrel.
They've certainly shown that commitment over the last few years.
Yeah,
okay, let's focus now on the local issues and the earnings season. It hasn't been great so far. If you take a look at the reports of Total, for instance, where we saw revenues down 6%. We saw Mobil also reports PAT down about 5%, so not great clearly. Corn Oil also reporting, well, in their case, revenues improved and profits were up. But overall, there is that sense that it's still a very difficult industry for the marketers. Moving further ahead, though, we've seen these results. How do you see things shaping up this year?
Okay, the challenges are still what they have been all through the time. We saw Total reports profit only because he sold assets. There was a line item there where they sold off some of their retail stations, and that's why they were able to report a profit. Otherwise, they would have ended the year in a loss. And that's the first time in about 40 years. It is looking most likely that it will not even report a dividend for 2019. Mobil, same thing. Of course, Mobil is doing a lot better than Total because, of course, they have the property business, which contributes a significant portion to their earnings. I know revenue from properties came in at about 5.3 billion last year, and that's something significant. That's what we've seen so far. But it's going to remain largely the same story going into 2020 because, of course, prices remain capped, particularly for PMS that accounts for about 70% of total revenues. You also look at the bottom line, you see that costs are ticking upwards. Landing cost is still as high as it used to. In fact, maybe even higher than it used to be. And, of course, other costs, logistics costs are still there, administrative costs are still there, and they also have. Last year, for most of the players as well, we saw an increase in finance costs, particularly for Total, and I think that was what dragged Total's profit last year, largely. Very high finance costs, on their books because of the overdrafts that they had.
Well, if we can talk briefly about the fortunes for the oil producers, so we're talking Seplat and Oando. Right. How do you see them faring this year, given all that we're seeing with the dynamics of oil price? But I do know that a few of them, at least Seplat, has achieved some diversification with a focus on gas.
Right. So for Seplat, I think we need to analyze them on a case-by-case basis, right? Definitely, the impact of the global oil markets would weigh on all the players in the upstream sector. But particularly for Seplat, we saw what they did with Eland last year, purchased Eland. So that's some further accretion to their reserves and, of course, higher income from oil sales. But of course, like you said as well, they're doing a lot of diversification in terms of gas. Gas currently accounts about 30% of total revenue. So they're doing a lot. And there's still so much more in terms of gas projects coming on board. The annual gas processing project, they are trying to expand the Sapele gas project and a few others. So they are trying as much as possible to reduce reliance to reduce reliance on oil, given that prices are volatile. Meanwhile, gas still remains around $2.50 per standard cubic feet. So they can still at least balance out there and smoothing earnings and revenue from the gas business.
But
for other players,
will be buying Seplats in that space?
Well, of course, you have to look at the fundamentals to determine that. Fantastic fundamentals, if you ask me. Revenue growth year on year. You see earnings growth. You see growth in reserves. That's reserves of the company and all that. And you think, this presents a compelling investment case. But for other players in the industry, you want to look at, if they are not so much into the gas business,
yes,
you want to look at how much risk they're exposed to by relying only on oil. And so we don't expect so much in terms of performance from them.
All right. Well, thank you so much for the insight. Olumide Ibikunle, Senior Analyst at Meristem Securities.